Hello guys, welcome to another video. Today I just want to share a very sensitive and important topic about trading. Mostly you don't have people talking about this aspect. Everybody is all about, oh, learn this strategy, learn this, place your stop loss here, place your buy here. They are just talking about different strategies. Nobody's talking about the risks around trading. So quickly, I want to, for most of you guys that are going to be going into prop firm trading, trading your own capital, I want to give you a psychological view and a psychological view of your risk management, because everybody talks about psychology, the psychology of trading. If you don't want your psychology to be messed up, fucked up, maybe in a way you'll be drained from having crazy losses, you must manage your risks. The reason why you must manage your risks is because at the end of every cycle, that's from your weekly trades, your monthly trades, at the end of that week or at the end of that month, from the trades you've taken will determine how much you've lost from your account, how much you are able to make from your wins and losses. Most of the traders out there, they won't tell you, oh, you can have a 3 days losing streak, a 1 week losing streak, or even though you don't have a losing streak, you can have 10 trades that may hit stop loss. Yes, they may still go your way. You can still do revenge trading to get those things back, but revenge trading is not advisable. Being a day trader, you must have the mindset of a calculated risk reward management. It must be calculated because you must not just expose your account out there. Risk reward management. Basically, when we're talking about risk reward management, we are talking about how much you want to risk per trade. So, your risk per trade is the most important figure you must be looking out for. Let's say, for example, I get a prop firm account of 100k. In that prop firm account, averagely, they are going to give you a daily drawdown of 5%, an overall drawdown of 10%, right? Now you want to do a calculated risk whereby you'll be able to come out profitable every week, every month. If not every week, at least you can be profitable every month, overall profitability in a month. So now your risk, ideally for me, your risk per trade should be $300, which is 0.3%. Now some people may say, oh, why 0.3%? It's because of the amount of trades you will have to take for you to lose that account. Now, if you want to use 1%, fine, it is good. 1% per trade, which is $1,000, right? But if you are using $1,000, that means it will only take you about 5 losing trades for you to reach your daily drawdown and 10 trades for you to reach your overall drawdown, which ideally is you are kind of close to losing that account. So reduce your risks to make more profits, so you'll be able to have a good psychology when you want to place trades and when you are looking at your charts to analyze. One is you are not looking out to revenge trading. For example, let's say I'm using 2% of my account and I'm risking $2,000. That $2,000, if I lose 3 trades in a day, I have gone down my, I've breached the daily drawdown of that profit account. But if I was using 0.5%, I will have to have about 10 trades for me to violate my daily drawdown. So you see, the lower you risk, the more you are able, the more trades you have to take for you to breach your account. So ideally for me, I use 0.3%, which is $300 for a 100k account. Now that $300, I have to lose 17 trades in a day for me to breach my daily drawdown. And for me to breach my overall drawdown, I have to take about 34 trades, which 34 trades to lose a 100k account is only a psychopath that comes to trading, and or a gambler that just comes picks trades at random, that gets to pick 34 trades with a calculated risk and lose your account. That's madness. So now quickly, I want to go to my Telegram channel. If you've not joined, please join. We hit over 10 subs, and we're on our next milestone is to hit over 100 subscribers. So right here, as you can see, trade for the month that we've taken so far, we've taken 8 losses and we've taken 4 wins, and we have 3 break-evens, as you can see. So now I want to use the trades we took so far in the month of December to show you a calculated risk reward ratio. If you were using this certain percentage of your account, you will still be up profitable for the month. So 8 losing trades mounts up to $2,400 if you are using a 100k account. The 4 wins we've had gave us $3,300, and those 3 trades gave us a risk reward ratio of 1 to 3, and the other one gave us 1 to 2. Now the 1 to 3 gave us 2,700, the other one gave us $600. If we do our calculation well and we minus 2,400 from 3,300, we are at a net profit of $900. In the part of this world where I come from, Naira, $900, for you to be able to make $900 from an account times 1,630, you just made 1.4 million Naira from your Profem account, which you can withdraw this month and still have your trading balance to trade for next month, or to continue to trade for this month. It depends if your withdrawal time frame is weekly, bi-weekly, or monthly, or on demand. It depends on the Profem you are using. But if it is monthly, you still know for the month of December, you are still up $900, which that net profit can still go up with continuous trading next week. So this week we are up 900. Next week, if we still take the same pattern of trading, which we have 4 wins, we still have 8 losses, we will still be up 1,800 for the month. So like that, even though you are able to make just $500 for the month, which $500 is 0.5% of your account. If you can be able to reach 1%, 2% of your account every month, it is an ideal profit for a Nigerian. I don't know whatever part of the world you are from. If you are from the United States, I don't know if $900 is ideal for you. But for us in Nigeria, for you to be able to make $900, you've literally earned yourself $1.4 million, which is way above the annual income of an average Nigerian. Way above the annual income of an average Nigerian. Now, let's go into having $1,000 as a trading equity for yourself. So now I want to leave the aspect of prop firm. I want to talk about trading equity. Now you have a trading equity of $1,000, right? You want to use the 0.3 risk per trade, which is $30. Now you have to lose 34 trades, 34 losing trades to lose your account. With 34 trades times $30 will make you lose 1,000. That's at that point you've lost your $1,000. So let's now go back to you having 8 losses, because 8 losses means in the percentage of trades that we took this month, we had more losses. So far in this month, we've had more losses than more wins. So we are down in number of wins of profitability. Now, 8 losses, depending on the strategy you are using, 8 losses equals to $240. 4 wins equals to $330, which 3 trades, which is 1 to 3 RR, give us 270, and 1 to 2 RR also gives us $60. So net profit for this month so far, we are up $90. Now, if you don't know, $90 in Nigeria times 1,000, that's 146,000 naira you've made yourself this week. So, which trading with a calculated risk is very good and healthy for your trading journey. This is my main message I want to preach out to a lot of traders out there. It is not a must you must over leverage. 1, don't do revenge trading. 2, 3, follow your plan. However your strategy works, follows it. As far as you have an edge in the market, you are surely going to have losses and you are going to have wins. Do not do revenge trading. Have a calculated risk. Mine is 0.3. Yours can be 0.5. Yours can be 0.1. Yours can be 1%. Yours can be 2%. It depends on how essential your strategy is. But ideally for me, if whatever account you are using, it won't be great if you go above 1% of your account size. Once you are going above 1%, for me, you are over risking, because you are reducing your chances of making more profits than loss. So for example, if we've had 8 losing trades and we are risking about 1% of our account, with $1,000, we've had $800 loss. Is that ideal for our account? No. Because what if the 8 losses come back to back, as we have 8 losing trades straight? Yes, this week we did not have 8 losing trades straight up. We had in between losses and wins. So the losses and wins were in between. But what of the days you have 8 losses, back to back losses? Then don't overtrade. Ideally, look for all your peers that you want to trade in a day. Make sure you are picking 2 to 3 trades in a day. Once you are done for that day, once you've hit your 3rd trade for that day, you should be done and you should not place any other trade again. It always affects me. Most times, once I have 3 running trades, immediately I take my 4th trade, I'm always hitting a loss or something, or the 4th trade is going to take away profit made from one of those trades, which ideally is not good or healthy for your account. So for you to grow your account, always have a calculated risk reward ratio, and I hope you have a great one. The next video will be coming up. I'll be talking about the trades we've taken so far in the group, what were my confluences, what I saw, and also plans and areas of confluence I still look out for next week. So I hope you have a wonderful weekend ahead of you, and next week I'll see you. Thank you. See you in the next video.